We have seen immense profit taking coming in case of the crude prices. The Brent is just about to break around that 89 level on the lower side. And if you look at the WTI crude, we have seen 77 come on that one. So very sharp declines coming in, 7% down on crude prices in this week itself. And if you look at the yearly data, the crude prices have declined by nearly 23% in 2012. So that's the kind of damage that you have seen in this space. The manufacturing numbers from US, Germany and China have come on the lower side. That seems to be really putting pressure. In the Asian markets, we did see a bit of a buying coming in. There were some reports of storms building up in Gulf of Mexico, but that clearly has been taken away from the way the Europe has opened on the lower side. That again is putting pressure here. Same has been the case with the base metal prices as well, with no strong data to support that cause. We have seen nearly 2% of a decline coming in last 24 hours in that space as well. The only bright thing really continues to be the precious metal space. Gold and silver prices just about trying to break into green at this point in time. We did see gold prices decline 3% yesterday, silver declined by 6%. But in the European markets right now, that's the only green patch that you would see across commodities.
Thanks for that as always, Manisha. Good having you with us on the show. Let's get into commodity trading strategies as well. Amar Singh of Aditya Birla Money joins in with some trading bets. Amar, first up, what's your call on precious metals like gold and silver?
We are seeing major volatility in the markets for the last few weeks in particular, and gold prices have taken severe beating over the past few days, in particular after the Federal Reserve announced that they would not be coming out with any QE3, and what at most they would be doing is that they would be extending their long-term funding. So the markets were disappointed, and we witnessed a lot of selling pressure in gold because internationally gold was not able to trade above $1640 and $1650, which was a major key level of resistance. And on the downside, it continues to have major support at 1520, but overall the trend for gold remains weak. In the domestic market, the sharp depreciation of the rupee with the rupee trading at record levels almost towards 57, that has somewhat supported gold prices domestically. But if you look at the trend for gold, gold continues to remain bearish. One should be on the sell side in gold. From a short-term perspective, one could go short at around 29,850 with a 28,850 with a stop loss above 28,955, targeting 28,600 to 620 could be a level of book profit. Silver also followed suit. Silver has also been witnessing a significant sell-off, and international silver continues to be supported at initially 26.7, and below that major support for silver is at 26 levels. In the domestic markets, silver has major support at 52,300 and resistance around 53,500. So it should be a selling off, or I would say a shorting opportunity in both gold and silver from a short-term perspective, as the overall trend for both remain weak.
So Amar, what about your views on copper? What levels are you watching there?
Talking about base metals, in particular, base metals have also been witnessing, I would say, a mixed set of reaction. We continue to see them trading sideways. There was a pullback in base metals, but again, over the past few days, the US, if you look at the US data, that again has not been very supportive. The US Philadelphia Fed Manufacturing Index, that was not positive. The existing home sales data that came out, that again was not very supportive. And apart from that, the disappointment about QE3 has also taken some shine out of the base metals. So as far as copper is concerned, one can go short around 414 and 414.5 levels with a stop loss above 417.5, targeting 409 levels.
Amar, what would be your call on crude oil? Would you be bearish?
Talking about crude oil has been witnessing a major correction in prices, with prices continuing to hit lows each and every day, and with the trend overall remaining weak. And if you look at the US equities market, there has been a sell-off, and majorly it has been I would say the QE3 again disappointment playing out very strongly for crude oil prices. And as far as the trend is concerned, crude oil continues to remain bearish. So any pullback should be used as a shorting opportunity with a short position build around 45, 60 levels with a stop loss at 4600 levels, targeting 4470 to 4480.